Good evening and welcome to another Liberty IT event. I'm Pam Haller, the Head of Marketing for Liberty IT, and this evening, Craig Saffin, our Head of Strategy and Operations, will host 4 of the most inspirational subject matter experts from the world of payments. The payments landscape is evolving at lightning speed with the emergence of near immediate digital payments and so much more. With so much technological advancement, there is talk about the future and what's next in payments. So today, we bring you an insightful conversation on the latest trends and what the future looks like for payments in Australia. As we listen to our expert panel, please feel free to type your questions on the Zoom Q&A. We'll take as many of those as possible at the end. Just a reminder, we are not FST Media and we are not Cybos. Liberty does not accept any sponsorship for these events. We're not promoting any particular products or clients of ours. Being part of the IT ecosystem in Australia, we run these events in the best interests of improving our industry and helping our audience learn something new and ultimately helping deliver valuable and straightforward technology to the end user. We are all very excited about the discussion ahead and I hope you enjoy it. So without further ado, let's kick off.
Good afternoon, everyone. We have an amazing depth of talent and experience in our guest panel today to discuss the topic of the payments evolution. Before I introduce each of our guests, we are all joining this event from many locations in Australia and overseas. In Australia, we will all be on different traditional lands. And in that context, I would like to acknowledge the Gadigal people of the Eora Nation, the traditional custodians of the land where I am based today, in Pyrmont, or Pirama as the Gadigal call it, and pay my respects to the elders, both past, present, and emerging. The Mesopotamian shekel is the first known form of currency and emerged nearly 5,000 years ago. Later in history, the earliest known mints date to 650 BC. In Asia Minor, where the elites of Lydia and Ionia used stamped silver and gold coins to pay armies. In May 2018, a gimmick attempt was staged in New York City, where a number of rented Lamborghinis lined up to promote the easy and fast wealth resulting from investing in Bitcoin. To us at Liberty, payments is summarized in a simple sentence: send and receive money responsibly, easily, securely, and in real time. On behalf of Liberty, I am delighted to host 4 of Australia's experts whose names are synonymous with payments. Firstly with us this afternoon is Nikesh Lalchandani, a renowned IT professional and a payments subject matter expert. Nikesh is an experienced banker with a background in technology and finance. He has worked in payments and innovation for many years in fintechs, banks, and startups. Nikesh is a postgraduate researcher, a chartered banker, and senior member of the Australian Computer Society, IEEE, and fellow of FinCEA. He is the head of policy for the Emerging Payments Association Asia. Nikesh is also a book author, and in August 2020, he published his work in a book titled Payments and Banking in Australia, From Coins to Cryptocurrency. The book challenges the assumption that banks will continue to control payments and the flow of money. To relax when he's not working so hard, Nikesh loves boating and cruising up and down river streams for reflection and relaxation. Good evening, Nikesh, and welcome. We also welcome Philip Finnegan, who has had a stellar career holding multiple roles in major payments companies such as ACI and FIS. He's a former managing director at Temenos. Currently, Philip is with Lay-By as the Chief Operations Officer. Philip is considered one of the finest payment subject matter experts, gaining vast experience from implementation of open payment frameworks at Australia's top-tier banks. Philip is an avid road cyclist, an extracurricular activity that has taken the corporate world by storm in recent years. It's a pleasure to host you tonight, Philip.
Evening, Craig. Thank you.
We also welcome Barakat Elian, the Australian Sales Director for Payments and Banking at FIS. Barakat is a former executive with NCR and has worked in most continents with a specialisation in payments. After FIS's acquisition of WorldPlay for $35 billion in 2019, FIS became the largest processing and payments company globally. Annually, FIS facilitates the movement of roughly $9 trillion through the processing of approximately 75 billion transactions in service to more than 20,000 clients around the globe annually. Coincidentally, Liberty people have worked on two FIS's most major local implementations at two of the big four banks in Australia. Barakat loves sport and is especially passionate about the Formula One. Thank you for joining us this afternoon, Barakat.
Thank you, Craig.
We also welcome Chris Hill. Chris is the Pacific Head of Sales for Payments and Banking at ACI Worldwide. ACI Worldwide is a payment system company headquartered in Miami, Florida. It develops software focusing on facilitating real-time electronic payments. In fact, ACI Worldwide software is used by 19 out of 20 of the top banks worldwide, 80,000 merchants directly and through PSPs. The ACI solution processes 225 plus billion customer transactions per year. Chris was formerly sales director at Innovo, regional sales director at MuleSoft, a sales executive at HP, and also Oracle. He is a seasoned payments industry professional. Chris is an avid surfer and a member of Surf Patrol New South Wales for 9 years in Cronulla and is awarded the bronze medallion. Thank you for joining us tonight, Chris.
Good evening. It's great to be part of the panel.
What a treat to be talking to four of Australia's finest technology minds. I am Craig Saffin. I'm Liberty's Head of Strategy and Operations. Welcome to our audience this afternoon, including a few internationals. Without further ado, let's play a short video and then I will ask the first question to Nikesh.
Sweden is fed up with cash. It's a hassle to carry around, it can easily be stolen or misplaced, and frankly, no one is using it anymore. 10 years ago, just about 40% of their population was paying with cash, and now, only 6%. So what's their answer? To go completely cashless by March of 2023. Back in 2012, the 6 largest banks in Sweden saw the trend coming and built Swish, an instantaneous mobile payment platform created for easy electronic payments. Now, with all this change to digital, one of your first thoughts may be, hey, how in the heck do kids use money? How do they buy ice cream or a new bicycle? How do they run down to the candy store for a lollipop? Check this out. Swedish banks issue debit cards to children starting at age 7. It's already been theorized that cash and coins will be put on display in museums so that children growing up will at least know what in the heck Puff Daddy is talking about when he says it's all about the Benjamins, baby.
Okay, firstly, a question to you, Nikesh. There is a steady and evident reduction in the usage of cash, checks, and plastic. The pandemic has just accelerated this change. What will drive the total obsolescence of these payment methods? Is it likely that real currencies will also have a similar fate in the future in favour of stable coins and other cryptocurrencies? If so, how will these be controlled and regulated?
Thanks, Craig. That's a great question, and thanks for the intro, by the way. I didn't jump in time, and thank you, Liberty, for organising this fantastic event. Look, that's a fantastic question, and look, when I hadn't seen that video before. When I saw that video, it reminded me of something we were trying to do when I was working for a large bank in terms of replacing the money box, right? So if you remember, as a kid, you might have had a money box where your parents gave you coins or for savings. These days, how do you do that? How do you teach kids the value of money? It's getting really, really complex. But look, they're getting by. They're getting by in the electronic world, just as we did back then. Look, this is really interesting. What's happening? I think the way I see it is we're moving our definition of value from one thing to another, right? So you said in your introduction that we had, many centuries ago, we invented commodity currencies. Now we've been weaned off those, and we've got fiat currencies. In the old days, notes used to say, "I promise to pay the bearer X dollars," right? So so much in gold. It used to be a gold sovereign was a pound. We've been weaned off that. We've been weaned off that to the extent where the value of a dollar is what a dollar is. It's what everyone thinks it is. There's nothing behind it. That's what a fiat currency is. We've gone off that notion. And then what's happening now with cryptocurrencies is interesting. It's teaching us that, hang on a second, what's the real value behind money? Because I think when it first came out, everyone said, okay, well, I don't get Bitcoin. What's the real value there? This mining thing, I'm not understanding it. I think we're gradually weaning off those ideas of what we thought value was. The next big step, I think the next step is, and we'll talk about it later, central bank digital currencies. Those are going to be really interesting. We're going to change our definition of money. It's not going to be this one-dimensional thing that we're used to, that everything is measured in the same value, whether it's food, education, or health. I think that's going to be the big change. I think the other big change is we originally, human society was based on trust. The sharing of information at a scale that you could not believe is now possible thanks to the internet. We can go back to that trust through the internet, through these shared ledgers, through the shared information that we have. And I think that's going to be the big change that we're going to see in money over the years. It's going to be challenging. We're going to get there slowly, but gradually we're going to be weaned off the ideas that we're used to.
Thank you. Thank you very much. That's a great answer. Thanks very much, Nikesh. Okay, let's talk about, as the next topic, let's talk about the emergence of digital wallets. Alipay has been in use since 2004 for digital payments. Apple Pay came on the scene in September 2014, and we can safely say that digital wallets have revolutionized the way we pay for goods and services. After watching a short video, I'd like your opinion, Chris, on the benefits and risks you see with such payment methods.
Commonwealth Bank chief told a joint parliamentary committee Apple has 80% of the digital wallet market share and effectively locks out other banks or competitors.
Apple restricts access to the NFC chips in its mobile devices, effectively locking out competition.
The thought that a single provider could have 80% market share in an individual market is usually cause for concern.
So what? What's the consequence of that?
Well, it means that there can be no competing wallets on the iOS operating system. So as I said, in Google, there's at least 8 that we know of.
The committee also heard about large companies self-preferencing their own products online.
In the digital economy area, one of the concerns that's been expressed internationally around these sorts of issues is self-preferencing by the big digital companies. So if they are operating in a market and giving themselves an advantage or discriminating against people they're competing against, that can have a very serious effect on competition.
Okay, so Chris, could you please give us your opinion on the digital wallets and related payment methods? Thanks.
Sure, thanks, Craig. And thanks also to Liberty IT for the invitation to join the panel. How can I say it any other way? Digital wallets are here to stay. I'm a massive fan of my Apple Wallet. I store everything I can in my Apple Wallet. I've got concert tickets, boarding passes, all my debit, credit, charge cards. I've got everything in it. It means everything's in one place. It makes it easier for me to find and to manage. It's really easy and convenient. And sure, look, about the video, Matt from CBA is right. The big four are also the biggest issuers and acquirers of card products in Australia. And so it's a big business for them. And Apple's managed through their might to sort of force themselves in the path of the payment if a customer's using Apple Pay. And so they take a clip, and that means the issuers and the acquirers have less to gain. So of course they're not going to be happy. It's a little ironic though, and I'm sure we'll all have a bit of a giggle that when one of the big four starts complaining about anti-competitive markets, I'm sure a bunch of other smaller banks would probably have a chuckle at that as well. But what Matt is saying is actually true. You know, Apple does have a huge market share when it comes to digital wallets, and so the clip that they take, if you're into you know, corporate tax issues, which is what was being alluded to, that money is really being offshored, and maybe they don't pay the tax that they're you know, that we would like them to pay, but that's sort of a different matter. I think there's actually maybe a more serious matter that Matt might have not mentioned that they're alluding to, and that is the ability for someone like Apple or other payment service providers to actually start delivering a service that disintermediates the banks from their clients. And as we move further into the world of open banking and the consumer data right rollout, that actually will enable these payment service providers to actually provide some very interesting services to their customer. And they'll do that through the likes of their digital wallet products. So that's an interesting threat, especially for the top four. Just in closing, the security issue would often be the biggest risk that people would see. And I've seen a couple of stats in our real-time report that ACI just issued, prime time for real time. One of the stats that I saw for the Australian market is that almost 40% of users in Australia have used a digital wallet or their digital wallet in the last 12 months. So this is growing, and there's obviously going to be segments of our community that are more risk averse. But really, when you think about it, I'll give you a really quick example and I'll finish my answer, Craig. But my 25-year-old son lost his wallet about a month ago, and it was full of maybe cash, lots of credit cards and debit cards or whatever he had in it, his license. And he thought he might have left it in the car or left it in his bedroom, and his bedroom's messy. So it was probably a week or two before he decided, I really have lost it. I need to do something about my cards. When you lose your mobile phone or your digital wallet, you know straight away. And when you lose it, you can put it into lost mode, and you don't have to go to the bank and cancel all your cards. The security in your mobile phone is better security than your physical wallet. And it's much more convenient, and it's a lot harder for you to actually get scammed, I think, using digital wallets. If you use the good ones, and there's probably a few of them, but Apple and Google are probably the key ones. I think it's safer and it's much more convenient. I love them. I'm a big fan.
Yeah. Thanks very much, Chris. That was excellent. I think the two things that stood out to me, and that was the extra or different product ranges that you could sell, and also the security issues. So thank you. That was some very interesting takes. So Philip, the next question is for you. But before I ask the question to you, I'd like you to just watch this short video, please. Thanks.
In the past few days, serious questions have also been asked about the $39 billion price tag paid for Afterpay by the US company Block, previously known as Square, and also its chief executive, the Twitter founder, Jack Dorsey. And that's because in a US corporate filing, it's been revealed that Afterpay's loss increased in the past year from $79 million, rather in the 6 months, to $345 million. So that's in the 6 months to December last year.
So this is a very well-run story, and everyone seems to know about it. But Philip, I'd like to ask you the obvious question about buy now, pay later. Is that even though it took Australian and consumers and investors by storm, it has not yet proven to be a solid business model. So why is that, and where is the BNPL market headed?
Yeah, that's a great question, Craig, and no surprise since that news broke a few weeks ago. I've been asked that a number of times. And thank you again for the invitation to talk tonight. I will call out something. It's, gosh, we need more gender diversity in payments, but we're all working on that. I know my colleagues at FIS and ACI are trying to work on that, but that's something we need to fix. To the question, I think we need context, and I don't necessarily agree with the premise of the question. So just to make it a little bit more exciting. So buy now, pay later as an industry is still relatively new. It's in an emerging, growing phase. So we've got a number of different players who have attacked different parts of the market. And many of them have perhaps chased revenue over profit in those early stages. And isn't there something, revenue is vanity, profit is, I don't know, sanity. So there is something at some point everybody needs to turn to that. And that's, as an industry, you'll see all of the players are starting to focus on less chasing that top line and focusing on profit. Some key things to call out, though, as we go on that march. It's still early days. You just need to Google Amazon. People talking about that crazy guy Bezos starting his company a few years ago, selling on the internet. That's never going to work out. And then what was it in 2003? He came up with the crazy idea of putting cloud computer power into the cloud. That's not going to work out either, is it? So early days, it is something that's it needs to grow. From a lay-by perspective, we know it's profitable. We're profitable in both Australia and New Zealand. In our markets, where we're focused is around growth. That does drag the P&L down a little. From a buy now, pay later sector, many independent reports. I tried to drag something up from ACIF, FIS, but I unfortunately couldn't find one. But many reports show it's the fastest growing payment method for B2C. That's going to continue a few years ahead. And I think one of the things I'd just like to really highlight as we think about this topic, I don't pay the same way my parents did. They didn't pay the same way their parents did. And to use an example with a 22-year-old daughter and a 19-year-old son, they don't pay or think about banking or payments the way I did. And that's something we really do need to think about. It's easy with this lacking diversity panel to think maybe, this is just a fad. But when we look at the trends, we're seeing consumers, particularly in the 25 to 35 year group, really starting to use buy now, pay later, use it repeatedly, and really see it as part of their ongoing business. So hopefully I've answered that question, Craig. I like the controversy. I can imagine I'm going to get a few questions in the chat about this as well.
Thanks very much. Thanks very much, Philip. That was great. Yeah, so I think that the profit piece is always something that people are asking questions about, especially for large tech companies. Yeah, and certainly my kids, like you alluded to, are using the afterpay services and the others that are around. Yeah.
Suggest a better one to them. Lay-by is a better option, mate.
Lay-by is a better option, and I remember, and I'm old enough, unfortunately, to remember what real lay-by was back in the old days when my mother would put aside a party dress and pick it up when she paid it off. So anyhow, that let's move on. And I want to have Barakat. The next question is for you. 24/7 bank processing, intraday processing, and schemes like the new payments platform, or NPP, paved the way for what we have accomplished to date: near real-time payments. What does the future hold for immediate payments for consumers, businesses, and corporations?
Thank you, Craig. Great question. And thank you again, Liberty, for this invite. Really appreciate it. It's an honor to be here. It's an honor to speak with all the great panelists and my colleagues, or most of us work in the same places. Philip, I actually, first, before I answer the question, there's actually a great report the FIS issued, the Global Payment Report for this year. We talk about the huge uptake of buy now, pay later, and the increase globally. We have some statistics there about it. So immediate payments, where shall I start? I think the first thing that's been coming to, so in the last couple of years in Australia, the focus was on stabilizing the NPP scheme, right? And we still as an industry have a little bit of work to do to mature that real-time payment scheme, both from a scheme side of NPPA and all the participants. However, now with the introduction of request to pay or pay to, that will pave the way for consumers, as you said, consumers, merchants, and corporate, to leverage the power of that immediate payment. And we're talking about consumers is the ability to request money from your friend or colleague and get them to pay you immediately, and also solve the problem for consent, because you send a request and then you consent that you're going to do that payment through the mandate. Also, the ability for businesses to like merchants to be able to accept account-to-account transfer as part of a payment method, even to buy not only for big purchases, but also for buying your groceries. Because tomorrow, if you can get a mandate that you can at Woolies using the QR code that Woolies is developing, you can then pay for your groceries through your bank account. Or if you're talking, and for corporates, it will solve the issue of liquidity and cash flow. Instead of waiting for your money to come every 3 days when you get invoices, getting that money immediately is a huge benefit from a liquidity point of view, especially for small merchants and SMEs. There's a lot of benefits for real-time payments. We're still going to see the benefits of the request to pay as the industry matures. But as I said, there's a lot of work that we all have to do as an industry. Hopefully, we all meet the deadline to go live in May 2023. I'm sure that with the Small 50 Liberty, part of what we do, hopefully we can go live with at least the participant that worked with us earlier. But I think the future of payments is in real-time payments. I think it does not take away from the importance of cards and other types of payments. However, it will be a new payment method that will take part of a percentage of the card transactions that we have today.
Thanks very much, Barakat. So yeah, the market's changing quickly, and where the payments are allocated is changing quickly. So thank you very much for that explanation. The banks are having to pivot a lot, aren't they? So can I'm going to ask Nikesh and Philip to answer the next question, but before I do, I'll play a short video just to introduce.
The idea of digital money is not new. Many of us use debit and credit cards or payment apps for transactions. But what would make a central bank digital currency different?
One of the big financial developments over the last few years has been the rise in popularity of cryptocurrencies, with one in particular, Bitcoin, standing out. Following Tesla's announcement that it bought $1.5 billion worth of Bitcoin in February 2021, the volatile cryptocurrency's price surged to new highs, giving it a theoretical market capitalization that is even larger than the world's two largest payments processing companies, Visa and MasterCard.
Unlike traditional money, cryptocurrencies are not issued by a central bank, but rather via a decentralized network of computers, typically using blockchain technology.
Investors in Bitcoin believe that because there is a theoretical cap on the number of Bitcoins that can ever be mined, the cryptocurrency will become increasingly valuable at a time when central banks have been printing more money than ever before to arrest the economic fallout from the pandemic. That's why people sometimes call Bitcoin digital gold.
Many central banks are worried that the widespread adoption of these independent cryptocurrencies could weaken their control over the financial system. This could cause financial instability, especially because cryptocurrencies do not have the legal or the regulatory safeguards that central bank money does.
Unlike your savings in a commercial bank, which rely on the bank's promise to fulfill, CBDCs are recognized by law and backed by the power of the central bank, which cannot go bankrupt.
It could make payments faster, allowing for immediate settlement and no processing delays, and it could also make payments cheaper.
The European Central Bank has plans for a digital euro, although it may be a few years before it is available.
We are going to have to address all the issues of anti-money laundering, financing of terrorism, privacy of users and all their information, the appropriate technology that will carry that digital currency.
Will central bank digital currencies ever become as trusted and as convenient as banknotes? Quite possibly, though it may take months, maybe even years.
So Nikesh and Philip, this question is for both of you. So if you could just take it in terms of answering or even as a discussion between you. With regards to central bank digital currency, can you give us your thoughts on the development and the future of this initiative?
Phil, I can start. It'd be good to get your thoughts. Look, I think what's amazing is if you look at a map of the CBDC, central bank digital currency world in 2014, it was blank. And I've had these conversations back then, and central banks would laugh at you if you suggested it. Today, every major currency, this is amazing, every major country in the world has either experimented, piloted, or researched CBDCs. Everyone wants a part of it. There's a paper out by the Federal Reserve that recommends, and the US president himself has backed, that CBDCs is a platform for innovation. So I think we're going to see a lot of action there. Philip, what do you think?
Yeah, I totally agree, Nikesh. It's gone from something that was somewhat a fad, a payments nerds discussion, to more real time. Two issues, though, I think that come into that is there's nothing really live yet, so a lot to come. And you even see, as you point out, Nikesh, the RBA have done a couple of pilots, cross-border, a little bit of domestic work, but they're a little skeptical. And the second issue is it's obviously political. So there's some definite discussion around, does a CBDC start to generate some political clout for any country that does own it? Perhaps maybe a new gold rush. Nikesh, just to generate some discussion between us, do you think this is one of the most confusing areas, though? Because you go, in thinking about this recently, I saw even the concept of decentralized central bank digital currency.
Yeah.
Do you think that where is it on the hype cycle? What's your thinking?
Yeah, look, I think it's still early on the hype cycle, right? So it's going to go through a lot of troughs as we experiment with different models. But the thing, Philip, and I think it's a really good point that you bring up, is that there's just so much complexity to it. There's so many dimensions to it, right? So there's a question, without going too much into it, will this replace private money? Private money makes up 90% of money today. Will this replace private money? What does it mean for a bank? Does this mean everyone's got a central bank account and you don't really have a bank account with your private bank anymore? All these sorts of things. And the other one is, can they start to do radical things with money, right? So today, monetary policy is weird. I know in Australia, right, we're going through a bit of inflation, but the economy is not doing that well. But nevertheless, they've only got one lever to pull. With the CBDC, can they pull more levers? Like, can they put an expiry date on money? Can they have different types of money, one for health, one for accommodation, and one for wealth? All sorts of things can happen. And I think we're going to go through those multiple hype cycles as, number one, we implement a CBDC. Number two, we discover that, well, this isn't quite doing what we want to do. Number three, what can we do about monetary policy in this new world?
Yeah, it's going to be an interesting cycle as we go through that. We're all going to learn a lot of new words, aren't we, through the process? I'm sure some of the vendor community will spend a lot of money trying to keep up with the demand. But you do raise a really good point. It does generate a lot of control and privacy. And I think here in Australia, that's some questions. Given our history, the public will ask a lot of questions before it's really adopted in mainstream. But gosh, there's some benefits to speed up commerce, particularly internationally.
That's true. I wonder if it'll ever be possible for, the government suddenly to turn off, well, they could do it now, to turn off your account. So, one day you're mega rich, the next day you've got nothing.
That's people who invest in Bitcoin, isn't it?
Yeah, that's right.
All right. Thanks, guys. I was particularly taken with the money that has an expiry date. I suppose that's sort of like airline points or something. That's a currency, and that has expiry dates in some airlines. So anyhow, that's a very interesting discussion. Thank you, Nikesh and Philip. So Barakat and Chris, the next question is both for you. And Nikesh's book takes us through payments and how we got here. But more recently, Uber and their application of embedded payments, which automatically charges at the end of a ride, means that Uber has embedded payments within its technology to the point that the ride-hailing and payments experience have merged into one, rather than to separate steps to be taken by the consumer. Barakat and Chris, please could you take us through your thoughts on what the future holds for payment technologies?
Thanks,
Do you want
Craig.
to start? Do you want me to start? You go for it.
Oh, thanks, Barakat. Look, it's interesting. You can take this question from either end, the consumer end, or if you like, the banking or the merchant end. But look, most consumers are looking for, just very simply, some convenience. They want to have their trust managed. That's the risk managed. That's a trust issue. And the cost of the transaction to them needs to be as minimal as possible. So when you look at ACI's customers, the sort of things that they're looking from us or force ACI to help them with, it's really simplicity, it's agility, it's cost, and it's innovation. So they're the key things. And then how we do that through the legacy technologies and the emerging or the current technologies, that's really the gold, right? And I'm sure Barakat has the same sort of challenges
Yeah, great point, Chris. And I think for me, I think embedded payments, what call it, now we're taking it hopefully in the future to an embedded experience, right? So embedded payments like an Uber kind of payments is already here today, right? And thanks to COVID, in one way or another, people are more adapting and accepting to use QR codes, right? And one of the main reasons that we were behind in Australia in QR code is because we were one of the first adopters to the tap and go. But today with the QR code, if you go today to a pub and you want to order 2 beers, you go to a me and you and you scan your QR code and you pay and you use your Apple Pay to pay. And I think what we're doing with the FPOS investment in QR code, and we saw the WPay with Woolies announcing the QR code payment, it is not replacing the tap payment, but it's actually providing more of an embedded experience during that payment for the customer, where you can add multiple stream of payments. So you can use a credit card, debit card, or even your account number through MPP, hopefully in the future, and pay through a single scan. And that's, I believe, that future of payments, or where we're going, is having that embedded experience. And payment is not the main thing that you think about. Like before, you used to spend 10 minutes counting cash. I think in the future, we'll be spending 1 or 2 minutes saying whether I want to pay it in one payment, whether I want to use Liberty Payment to pay it for 3 installments, Afterpay, coins, and also at the same time embed my loyalty to improve that multi-touch experience for the consumer. Instead of tapping my 3 cards, by scanning a QR code, I can have that one touch that I can get my loyalty points. I can pay with my credit card, my gift card, and hopefully with my account. I think that's the future. That's what the industry is focusing on, is developing better embedded experiences through payment. And I think we'll touch on data. But Chris, from your point of view, where do you think we're going to be going with taking, what's next after like QR code, after what we're doing with real-time payments? What do you think next for payments? And that can be anything, but what do you think we want to go to next?
Well, look, I think, Barakat, you raised some really interesting things. I think the WPay case study is a great one because it's a convenience thing. One of the interesting things about that use case is how they digitize the receipt and include the receipt as part of that experience. So it's a digital receipt, you can store it, you can actually look it up at a later stage. So one of the things that I know as a consumer I get really frustrated about is when they hand you the old paper receipt and they say hold on to it, and we all know with a little bit of sunlight that thing deteriorates in minutes. So and you've got to keep it for warranty. So that whole digital receipt as part of the experience and the loyalty, that sort of combining that together for the consumer, again, stored in a digital wallet maybe. And what I think, by the way, all of this is real time. That sounds much easier than it is, but that's where things are going. And maybe that's taking some of the transactions off the current credit card rails, or maybe it's replacing, or maybe it's new because we're doing, pay to, the request to pay stuff. So, but I can see where this goes next possibly is where you can now, if you're a bank, when you start actually integrating all of these pieces together, especially if you think about digital receipts, you can now start thinking about delivering enhanced banking services to your banking customers. And the payment service providers might be able to do this too if they actually start getting some scale, where you can actually start helping people with their spend management, their expense management, or their money management. And so you can start really helping people understand where they're spending their money, how they're spending their money, categorizing it. These are the sort of services, these are out there in the market at the moment, but they're really limited by the data that you can actually get into these systems. So when you look at the Uber experience, where you've got all of this, it's an invisible, frictionless payment, that's actually just the tip of the iceberg. The WPay experience is another one where you've got loyalty and the digital receipt actually encompassed. And now when you start looking at these standards, if you look at some of the ISO message formats that we're all looking at implementing as we go into the real time, the data that comes inside those payments is something that we can actually start doing a lot more with to deliver a much better experience, a much better analytics, which is better for customer service and service provision to the end user consumer. So it's actually really interesting. And then on top of that, you've got the artificial intelligence discussion. I don't think we've got the time to really delve into it right now in this discussion, but with all of that extra data and the use of machine learning and artificial intelligence, you've got real-time payments, you've got convenience, frictionless, and now you've got a whole lot of data that now is there for you to use either to deliver services or actually to help you secure your payments even better than we do today.
100%. And I think from that first video that we showed, instead of tomorrow having an EMV chip in my hand, I'm just going to tattoo a QR code.
Yeah.
Okay, thank you very much to the two of you, Barakat and Chris. I think that it's a lot of very interesting points. One of them I took away was about the data or the metadata in the transaction. It seems in this era that the data about the transaction seems to be almost as valuable as the transaction itself. So certainly that's the way a lot of these digital companies are making their money now, by having access to or generating that data. Okay, Nikesh, the next question is for you. So NPPs. Before I ask this question, I would like to encourage the audience that's listening to this panel. Please, can you, if you have some questions of the panel, can you put them into the chat? And I will be looking at that. And if we have some time at the end, we'd like to use some of those questions to the panel. So I would encourage people who are listening to please enter some questions into the chat. So Nikesh, NPP's next stage is the launch of Pay2 in April 2023. It's a great initiative. However, NPP to date has been affected by resiliency issues. The RBA reported many unplanned downtimes for NPP services providers at an average of almost 7 hours, which is considerably higher than other payment services like card payments. What do you think about Pay2 and more specifically about resiliency in the payment systems?
Yeah, Craig, look, I could go on with this for a while. Look, I don't want to be too harsh. We might have some people in the audience from Pay2. Look, I think it's a wonderful concept. MPP, account-to-account payments, it is a future. There's no doubt about it. I don't think we executed it as well as we could have, and I'm not blaming the regulators. I'm not blaming MPP. I think just collectively, whatever happened didn't quite get there. If you look at what India's done with UPI, if you look at what Hong Kong's done with their fast payment service, there's examples around the world where they've really done it well. And I think the problem that we have with the reliability, and that was your question, the reliability is an issue, I think is the biggest problem. Because what happens is you've got the early adopters. With any new product, you've got these early adopters. These are the people that are going to tell their friends that this is worthwhile. Now, you imagine day one, and I've been there, right? Day one, the number one use case that everyone came up with was used car selling, right? So I've got the money, you've got the keys, let's do the dance. If you do, the only way to do it in the old days was with cash or a bank check. You do that with MPP, I send you the money right now. It's a lot of money for me. It's my I've just started working. It's my first $5,000. I want my wheels. I give you the $5,000. I send it by MPP. My bank says sent. Thank you very much. Fantastic. You're sitting there and you haven't got the money. And the reason that you haven't got the money, and none of us know this, is my bank's held it over for 1 day for fraud checking. Right? We're waiting. The money doesn't go through. I don't know what's happened. I don't know if you're lying to me that you haven't got it. The money's gone. And that experience, it was so terrible with MPP. I think it's going to doom Pay2 to a similar fate, simply because that generation of early adopters just doesn't want to touch it, right? And one example is carsales.com. They jumped on that used car selling thing. They implemented a solution using MPP. They pulled it out of market. I don't think they're going to jump on the next one that quickly, and that's really unfortunate. It was really important, I feel, to have the experience right. And when we're doing Pay2, I ask anyone who's involved in that, don't launch until you've got a really slick experience and it's consistent and it's reliable.
Okay, thanks very much, Nikesh. That's excellent. I can feel. I think the thing that's consistent with you and the other panel members is I can feel the passion in every one of the answers. So it's fantastic, actually, a lot of energy. So thank you very much, Chris. The next question is for you. Let's switch topics, and before we get onto that, then I'd like to play a short video that puts the new topic in context. Thank you.
Wirecard is a payment processor that facilitates debit and credit card transactions. In 2005, a little-known startup called Wirecard joined the Frankfurt Stock Exchange. The payments processing company soon became a unicorn, eventually surpassing Deutsche Bank, Germany's biggest bank, in value. Wirecard grew to become Europe's largest financial technology company, worth $28 billion at its peak. Then in June 2020, it filed for insolvency, finding itself at the centre of one of the biggest financial scandals in history. While Germany's financial regulator denied that it was protecting Wirecard, the company continued to emerge unscathed after each attack, and it became emboldened.
Huge questions. I mean, is it an Enron type situation? Well, yeah, because Europe has got massive egg on its face. They wanted a big tech giant. They ignored a lot of the facts. What about the regulators? What about the auditors?
Wirecard's auditor, EY, is also facing scrutiny for failing to check Wirecard's bank statements for 3 years.
Okay, so Chris, for you then, I bring reference to Austrac's penalties of $700 million and $1.3 billion to CommBank and Westpac respectively. So let's think about digital identities, particularly in the context of cross-border payments and in the context of financial crime. So let's also think about the role of regulators and the role of the auditors. And we've seen companies these days applying AI solutions to real-time payment processing and financial crime prevention. Can I hear your thoughts on this, please?
Yeah, thanks, Craig. Bit of a touchy subject. I'm not sure how I'm the guy who got this one, but look, both of those two banks are large customers of ours, and we work with them and talk to them about fraud and AML all the time. So I think you'll find that all of the banks, especially the big four, are doing a really good job to manage fraud within the limits that they actually forecast. And anti-money laundering is actually, critical. And if they get that wrong, as you can see, they get massive fines. And I think one of those fines is the biggest fine, I think, in our history in Australia for financial services companies. So there's a lot at stake. And these banks especially invest a lot in intellectual property and in the platforms to actually manage the fraud and to, do what they're required to do to manage anti-money laundering. And it's actually a little bit more than anti-money laundering too. It's also, they do things that are related to terrorism as well, terrorism funding. So it's actually really important. I think they try very hard and invest a lot of money, and they're actually really quite skilled at it as well. Interestingly though, fraud and financial crime, or AML, are actually different things, and they're managed very differently. What I wanted to be able to maybe just put a bit of a slant on this is that the challenge that the financial services, or specifically the banks and the intermediaries or the processors have, is as we move to real time, how do they pick up on this without actually interrupting the payment and slowing it down? Nikesh just gave a great example of how something that the MPP should have been able to do, and there are moments when it just doesn't, and part of the reason is the fraud management piece. So when you think about it, immediate payments have sort of been around for a long time. A lot of people are very comfortable using cards. That's why merchants love them. That's why consumers love them. Whilst the settlement of that transaction is not immediate, certainly the clearing of it is. So card fraud has been around for a long time because they're very widely used. And it was in the old days, if someone dropped their credit card or their bank card on the ground, you could run off and try and use it. Card not present fraud has been probably the biggest issue in our industry for a long time. Largely I think we've been able to manage that within the limits that the banks and the processors are prepared to accept. But the real-time fraud now is really starting to become the #1 risk. And there's a thing called app fraud, which is all about authorized push payment. And that's about someone being scammed. So you get an invoice, it might have your utility provider. It looks exactly like the invoice that you'd get from your gas or your electricity provider. And you know that you've got a bill coming. It looks like the right bill. So you just pay it. You go online and you do a little payment, whether that's a real-time payment or a BPay, but it goes into someone else's account because it's a fraudulent invoice. That type of fraud now is actually really difficult. And it's particularly difficult because it's actually nothing that the bank can do to actually prevent that. It looks like a very legitimate payment from the payee or from the payer, but what we've seen now is in the UK, that app type of fraud, the app fraud losses are bigger than the card not present losses. So it's actually becoming the biggest issue that the banks actually have to look at from a fraud perspective. And so, look, really, just in closing, how do you do that, and what are the banks and processors actually doing? More and more, they're actually developing the rules and getting tighter and more intelligent rules based on machine learning and artificial intelligence that I looked at before. And these systems, and ACI actually provides some fraud management systems to a lot of banks and processors. What you can do is actually be very intelligently flagging or marking certain transactions, and you can actually reach the customer or the client in near real time and get them to validate whether or not that was actually them making that purchase or that payment. And so that way you can catch it in flight. But again, as we move to real time, as Nikesh said before, that becomes a real challenge. But we're also getting benefit out of moving to real time and standards-based messaging, because like we said before, you get more metadata, and some of that metadata can actually help you identify the more likely to be fraudulent transactions, and they can also give you better analytics so that you can improve with machine learning.
Yeah, thanks, Chris. The predictive piece that the banks are using, as you suggested on the AI, is I've been as a humble consumer of a great bank, then I've been picked up, flagged a lot actually, and they call you and question your stuff proactively, and that's a big change to several years ago. I agree with what you're saying. It's fantastic. So that's just perspective from a consumer. So thank you very much. And the next question is for you, Philip. Cloud and API technologies have paved the way for open banking and banking as a service. Integrated solutions, agnostic of providers, should make life easier for consumers, particularly as data is shared between entities responsibly and with regulatory compliance. We heard CommBank is offering 10-minute unconditional home loan approvals. We have come a long way with KYC, or Know Your Customer, and identity verification, but also have the data to verify income and expenses for responsible credit decisioning. So Philip, where do you believe we are headed next?
Yeah, this is absolutely a growing area. And what was it, 2 months ago, Apple acquired a business in the UK called Credit Kudos. A little tuck into their business, but it just shows how hot this particular area is around open banking and data. So we've now got those technology elements in place. Largely data can be shared. I'm not sure it's always responsible, Craig, just to pick on your question. back. Sometimes I think it's irresponsibly shared, but we have really a great deal of opportunity ahead of us. As Chris just talked about, we can contact consumers directly. We can use AI. We can use bots. I think probably to answer this a little differently is not where it's heading, but where it should head. So we all spend a lot of time, and I've got to say, my fellow panelists, we've all spent a lot of time doing this, encouraging more payments, encouraging people to spend their money faster, creating systems that do it faster and faster and faster. I challenge the industry, it's now time to be responsible about that. We have so much data about what a person is doing. We look at salary information that comes into their bank account. We look at their spending behaviours. There's, as you look at an old card transaction with just all of those pretty mundane fields, as you go to real time, we know so much more about that consumer. You can use biometrics to decide, is that actually the consumer on the phone? ACI have a great partner with BioCatch, but we can also use biometrics to decide, are they a little intoxicated and shouldn't be doing this transaction right now? We can use that data to assess people differently from a credit decisioning perspective. So rather than just look at points in time to offer credit to someone, which is usually a point in time outcome for a home loan, credit card, or a buy now later solution, banks and the ecosystem can potentially use all of this data to make decisions at the point of purchase. They can also, rather than just ratcheting up how much you can get in a home loan, because we've noticed you can potentially pay off a home loan, or bigger credit card limits, we can use this information to be more responsible about offering other value-added services. So yes, the technology is fantastic, cloud's enabled, great propositions. We're going to see more and more banking as a service. That's a trend that will just continue as people look to white label platforms integrated into payments. But I think, just to be a little bit controversial as we get on to 6 o'clock at night, maybe we need to be more responsible with all that data.
Thanks very much, Philip. I think a lot of these new developments, part of the problem seems to be governments having trouble keeping up, actually, and the regulatory piece definitely lags. So I appreciate what you're saying. So thank you very much. Barakat, please talk to us about your thoughts on current trends of alternative payment methods. For instance, QR codes, social media payments, and account-to-account payments. We've touched on some of these already, but I'd like to hear a bit more detail from you on these methods, if that's all right.
Yeah, thank you very much, Craig. I think in Australia, we're a little bit behind when it comes to super app payment, like what's happening in Asia. And I did explain on that because we were also one of the first adopters of TAP and EMV payments here in Australia. However, I think with the development of QR code and what EFTPOS is doing with QR code, that will definitely introduce a more type of payment methods in Australia, especially with Pay2. Hopefully, it will be more reliable than what Nakesh is anticipating. We're definitely all working together to make sure that this is a success story for Australia. But I think next steps, what's a new type of payment is the metaverse. I think people, and we've been at FIS looking at developing how we can pay through the metaverse. And you go to a virtual place, you see a car virtually, and then you pay using your digital ID or your bank account. Alternative payments, as Philip said and Chris said before, it's all about trust, about convenience for the consumer and the merchant, and about the fees. So for the consumer, as long as you provide them with that trust, and then you provide them with the convenience of how they want to pay. So whether QR code is to reduce the number of touch points for them, social media and Uber payments is embedding that payment into the experience that you're having in that super app, or from account to account payment is by enabling it to get the money immediately and bypassing the cards rail for merchants so that you reduce the fees. So as long as you achieve two out of these three hierarchy, and obviously trust always have to be there, but then convenience and fees, the more convenience, the less merchants will think about the fees. And a great example is Afterpay for that, because it touched on how they can introduce more selling, and helping merchants sell more. And that's what they touch on for buy now, pay later. So then merchants give away from the fees perspective. And for merchants, it's also helped them with looking at reducing the fees for credit cards by using buy now, pay later, because the merchants are paying the fees in some of the examples. I think we will see more and more account-to-account payments going forward in Australia with the introduction of Pay2. We're yet to see how it's going to go with QR code in Australia, but I believe it will be it's going to be a great success story, but it's still something we need to watch and see how it goes.
Well, thank you very much, Barakat. Yeah, it's interesting about the fees, isn't it? I remember a time when these were totally mysterious and in the background, but now they're much more upfront. And you can make a choice at the time of payment about which is going to track the lowest fees. I think the amusing thing for me is when you pay tax to the government on your credit card, they charge you a fee as well, which is like a pretty interesting. Okay, Nikesh, I'm going to play a short video, and then the next question is for you. Thank you.
A powerful coalition representing some of the world's biggest democracies announced it would block some Russian banks from SWIFT. So what is SWIFT? SWIFT, which stands for the Society for Worldwide Interbank Financial Telecommunication, is a global system that banks use to securely send and receive transfer requests. SWIFT handles billions of financial messages each year. And while there are other systems designed to circumvent SWIFT and challenge the dominance of the dollar, SWIFT is by far the most commonly used system around the world. It connects more than 11,000 financial institutions in more than 200 countries and territories. Foreign banks have about $121 billion in assets owed to them by Russian-based entities. So cutting Russian banks off from SWIFT could make it hard to collect that money. However, the West is planning, for now, to keep some Russian banks online for oil and gas exports critical to the European and global economies.
Okay, thank you, Nikesh. The decision to switch off SWIFT transactions to a sanctioned organization or country could have worldwide economic ramifications. So is such heavy reliance on one intermediary, such as SWIFT, albeit regulated and monitored, a good idea?
Yeah, thanks, Craig. And I think you said that we're all passionate. I think you know how to push our buttons. That's what it is. This is something I feel really strongly about. I've written about it at length. Look at the outset, there's a political problem there, and a lot of people have died, and what's happening in Russia is terrible. I don't even want to start that conversation. But there's one fundamental thing, and this was something that John Keynes established. And John Keynes is considered to be the father of modern monetary policy and economics as well. He went through the Great Depression. He went through World War I. A lot of people didn't listen to him. In his dying days, towards the end of World War II, everyone was all ears because he had predicted what would happen in both cases. Many people thought that one of the major causes of World War II was the way that the Germans were treated in terms of participation and repatriations and so on, reparations. Sorry, and he said this. He said, "You can't treat a sovereign nation like a bankrupt individual." So cutting off any country, no matter what they've done, for the financial system, is terrible, because we've seen, how countries have progressed, when they're able to participate. It led to a lot of frustration. That anger created a desire to fight back, and that's what a lot of people think caused World War II. Similarly, in SWIFT. So SWIFT is really three things. It replaced telexes in terms of coming up with a mechanism to pay between banks. It's a message standard. The SWIFT messaging is a message standard, and it's also a network. Since SWIFT was invented, we've worked out all these other networks, primarily the internet, as a way of exchanging information. We're not too fussed on what the standard is. We've got a million ways of coming up with standards, and there's so many different payment networks. It is the major one. Cutting it off is extremely problematic because what it does, what the signal that it sends, is that we can cut you out of the world economy. And what that's going to result in is, number one, it could result in anger. And now we're talking about a nuclear war. We weren't talking about that in World War II. We're talking about it now, at least not at the beginning. It could result in these countries turning their back on what has been a very successful and standardized payment network that's prevented money laundering, that's prevented to a great extent terrorism financing. Getting those countries out of that system, I think, is terrible. Making them broke will lead to a lot of dissatisfaction in those countries. I think personally, I think it's a mistake to cut anyone off from the financial system, no matter what they've done.
Thanks very much. Thanks very much, Nikesh. Sorry, I've got a few things going on here, technology. Okay, all right. Thank you very much for that. I think in reference to what you were talking about, we have a real live situation playing out in Sri Lanka at the moment, don't we? So I think that's a fascinating play as we're changing politics, and also a country is trying to stay out of bankruptcy. So that's directly related to what you're talking about. So can I call on you, Barakat, please, on the next question? So banks and financial institutions collect an incredible volume of data. We've already touched on this briefly today. Many insights can be drawn from such a huge array of data, particularly payments data. Behavioral patterns can be analysed, and predictive analysis can safeguard and better advise the bank, the government, but ultimately businesses and the consumer. Barakat, what are some examples of payments data collection and clever analysis that can be used to benefit the consumer?
Yeah, definitely. A small example of data is when you Google something or research something, the next day in the morning you start receiving email targeted marketing about it. And imagine you take that to the next level when it comes to payment. No one can know your behavior better than your payment provider. And if you can collect this information about consumers, you can provide a better targeted marketing. And some people look at it and say it's a bad thing. I believe it's a great thing. I would love to receive 10 emails about something I'm interested in than 100 emails about random stuff that I don't care about. So empowering the merchants and financial institution acquirers, empowering their merchants with these data to give targeted marketing, build deeper relationship with their preferred shopper and app. That's actually a great example of how we can leverage data. And also on something that Chris mentioned before, for fraud, the more data we have our customers, the more we know about their spending habits and behaviors, the better we can protect them, the better we can protect the merchants too and the schemes. One of the other thing is also loyalty, right? With more data you get about the shoppers, you can better offer them some loyalty programs. And for small businesses, and this is an example from major acquirers, where you can help small businesses by identifying the buying habits of their customers in certain locations. You actually can help them stock for certain items in certain locations, so that when you go to, let's say, your WPay, your Woolworths Metro, and you always buy that specific bar of chocolate, I know that you and 50 other people like that type of chocolate, so I always make sure that it's stocked nearby you. There's so many ways. I'm very passionate about the use of data for payments, and I think with the introduction of alternative payment methods, because today with the card payments, when you do on the POS device, there's a limited amount of information that we're receiving per transaction. But with alternative payment method, with the QR code, with a card not present adoption even more, you're receiving more information with that payment transaction that help merchants, banks, and analyze the customer, build a better profile about these consumers so they can provide them with a better service. And also on the other end for corporates, in data with the ISO 222 and pay to and request to pay, that huge amount of data that you can send with that request to pay, like a contract to corporate or receipt and a bill, so that you can bill the amount. That's amazing. That can fix a lot of problems for corporates in the future.
Thanks, Barakat. Yeah, I know you used to work for NCR, right? And I remember a story that used to be circulated by Teradata, actually, about a young lady who was who the marketeers that were targeting her knew that she was pregnant before her parents. So that's an example.
I was actually a data developer at Teradata at NCR before, and yeah, that was the first invention of data lakes and data warehouse, and how can you work in data and build better critical reports for customers.
Right. So you remember that story, right?
I do, definitely.
Okay. All right. Thank you very much for your answer. That's great. And as I suppose the main point of the question is, how can it benefit the consumer? So as long as the data is being used to benefit the consumer and not just the service providers. So that's very good. Thank you. So Philip and Chris, the next one is for you. Beyond technology and specific products, everyday bank or financial institution which embarks on a payment solution modernization should have in place the right team composition to complete its journey successfully. What do you think is the role of the right implementation partners to accomplish that?
Chris, would you like to go first?
Thanks, Phil. Look, ACI's got a lot of experience at being a partner to help our customers implement payments modernization. It's a bit of a journey, and whilst we'd always like to get better, we're looking for ways to improve and engage differently. But if I were to put it down into three simple elements of what I think describes the right partner, it would have to be these. So the first one would be, you need to have a partner that has extensive payments experience, because if you're talking about payments modernization, you're moving from something that is probably, let's call it legacy. You've probably had it implemented and working for 20, 30, maybe 40 years, could even be longer, but it's about that heritage. And it's very complex to be able to move from something that old and to manage the risk and to manage the cost and to get it right so that you have a good experience and you've got the reliability and availability and everything that you're looking for to continue moving forward. So you really need to partner with someone who's got the experience in what was and has the skills and the experience in what will be, so the current and the future technology. So that's the first part. The second, probably most important part, is that you want a partner that can be flexible and strategic. And really what that means is you have a long-term view, because payments is a long-term view. You can't pop in and out of being a payments partner. That's just not the way it works. This is a big investment to be a partner, because it's a big investment to be a customer. And so you need to choose a partner that has that long-term view, is prepared to be flexible, but has a very strategic view in terms of what it is that they're providing. And so how would they provide it? And then the last part, maybe more relevant to where you were getting from, would be around the engagement model. You really, to make these payments modernization projects successful, you need to engage with business sponsors, not just technology sponsors. And I think what we're learning to do better and better is we need to be prepared as a mature partner to challenge our customers, so that we don't allow them to go down a path where they fall into a trap and then we go, well, we thought you knew that, or we thought you really wanted to go down that path, but we could see the pothole. I think customers want to partner with you to help them with insights to understand what the implications and consequences are of some of their decisions. And then lastly, from a model perspective, you need to be agile, you need to be able to be quick, and you need to be able to be as cheap as you can. So there's always a good balance of onshore and offshore resources. So experience that you've got from around the globe and experience that you have here locally. I think all of those things are really important. I could probably talk for a bit longer, but Phil, sorry, you've got a lot of experience too. What do you think is probably describes the right sort of partner?
Yeah, I thoroughly agree with all of those things, Chris. If I could synthesize it to a couple of different words, clearly needs to be a payments expert. But I think really important is somebody with the vision to operate. We've talked about a lot of complexity tonight. We've danced across a lot of topics that are currently facing us. They're ahead of us. You need a partner who has true vision. But it's not about the technology sometimes. And I'll say that with a smile to my colleagues from FIS and ACI. It's really about getting the change of culture and approach in the financial institution. If you are doing a lift and replace, simply replacing legacy technology with newer, interesting technology, perhaps in the cloud, is not going to change things for the incumbent providers. It's the ability to really have the mindset, as Chris said, to think agile, to think about adapting to the changes that are ahead, but through a large organization that requires a lot of change in downstream processes. So I think what's really important is a partner that understands it's technology, it's absolutely about technology, it's absolutely about payments, but the culture and the transformation the business needs to complete as part of that program. Very easy to whack in a brand new piece of tech up front and then see months and months of problems when a bank or institution needs to deal with fraud, returns, hooks into their various systems, and oops, we forgot to do AML with that new fandangled system. So really getting that right transformation cross-organisation view is essential. And I'm sure that's something, Craig, Liberty IT are experts in.
That's very kind of you, Philip. Thank you. Yeah, I'd thank you for your answer. That's great. And for both of you, that was, I mean, there've been great answers right throughout, and we're coming towards the end of the panel. But before we go, that's the end of the formal questions. But actually, the audience has been asking a lot of questions while you guys have been giving your fantastic answers. So I just want to go to a few of those because not only because there are some really good questions that have been asked by the audience, but also that's respectful to do. So the first one I'd like to ask is a little bit something that's real time for us and a real issue that we're facing in Australia. There's been a lot of, you know, in the one season we've just had in summer, we've had huge floods around the country, and we've had massive bushfires in the west. And these are real issues that threaten the internet and an ability to stay connected, which is essential. So when you're talking about digital payment methods and you're talking about people being isolated from the internet and electricity even for weeks at a time, what do you have in mind as far as the cashless environment is, and how should people be able to survive in that situation? I'm just asking the question generally. Anyone in the panel, anyone or someone in the panel could just put their hand up.
Can I take that? I think when technology fails, and especially with what unfortunately happened with the floods, there's always a place for cash, right? Cash is not disappearing. Cash is still there. As much as all of us here want to replace cash with technology because that's the business we're in, I think there is a place for cash all the time. But I would like to mention that with everything that has been happening for the last 10 years in Australia, we've been running the FPOS hub with 100% availability. We're actually going to announce 10 billion transactions with zero downtime that we've been running it for FPOS as FIS. So the systems that we have in place, and that's not only FIS, across the board, are very reliable. The whole industry, whether it's FIS, ACI or others, we spend a lot of time on actually developing these systems to make them to that level that they are very reliable. But when the internet is not there and you don't have connection and you don't have anything to stand in, then the answer is cash, unfortunately.
Does anyone else want to have a stab at that? Thank you.
I totally agree with Barakat. I mean, you can't, in a situation where you've got floods or fires and you've got infrastructure down, I mean, people can't keep their mobile phones charged, or they've lost their mobile phone. So you just can't get around not having cash. And actually, interestingly, the Commonwealth Government is one of the biggest users now of the real-time payments platform, so that they can deliver emergency payments through the Reserve Bank, and I think it's Services Australia, to recipients very, very quickly. Now, if it's sitting in their bank and they can't get to it, that's not great. But then the banks were actually working with each other and between each other to support communities, and they were actually getting cash into the communities. So there's ways around it. I mean, these are exceptional circumstances, so I don't think we can plan our whole payments future around when there's fires and floods. But I think the question is really valid because they do happen. And when they do happen, we need to have a way of being able to coordinate so that people can still carry on and live and do the things that they need to and actually recover from the trauma that whatever the flood and the fire has actually caused.
Yeah, I agree with all of you. I think right now that's the situation. I do feel though, and we're seeing this happen, right? So we've seen the internet move from being a novelty to being a nice to have to being a critical service. I can see a future in 20 or 30 years, not far from now, where it becomes an essential service. So the first thing that happens when there's a fire or flood, if there's a fire, they call in the fire brigade, they put the fire out. The next thing that happens is, a telco's out there with a mobile tower, right? Because it's going to be so critical in the future. And, when you talk about these CBDCs, they just pretty much, it's very difficult to have them work, without that connectivity. And I think, unfortunately, like it or not, we're heading towards that sort of world, I feel.
Very, very, very interesting situation, isn't it? How we think we're advancing, and then something comes along to sober us up, doesn't it? So So the next question is about CBDC. So will the use of cases of CBDC such as programmability, offline anonymity create a demand for CBDC to not only compete with cash, but also the existing payments infrastructure and payments behemoths like Visa and MasterCard?
I might start, and then Nikesh, you can pick up the rest. The answer is yes, but not now. So all of the Visa, MasterCards are looking at that. It just doesn't have the scale, the interconnectivity required at this point in time. Plus, it's somewhat theoretical, and we didn't talk about this earlier, Nikesh, but the base technologies are not clear. Most people leap to the assumption it's all on blockchain. Actually, many of the pilots are not. Most of them are not. The technology's got a ways to go, but clearly it's getting the attention of Visa and MasterCard one day. But I think I can be brave enough to say not in the short term. Nikesh, you might want to be more controversial than me.
Yeah. Look, 100% agree. It's going to take a while, but rest assured, outside the US, everyone's got their eyes set on the American schemes. They feel that there's too much concentration there. A lot of the policies that they're implementing in Australia and elsewhere, even if it's not explicit, are directed to opening that up. Look, Mark has put some really good points in the Q&A. Cards, I agree with you, Philip. They're so far ahead. It's going to take ages to catch up. And the other thing is that MasterCard and Visa and Amex, to some extent, have been innovating like crazy in payments. They're all over this. And before we get a CBDC, they've probably patented the idea. So I wouldn't be surprised if they're part of that future world, but in a different way than they are now. But absolutely, look, I think the target for CBDCs are the payment systems, are these sorts of things. But yeah, it'll take time.
Anyone else would like to comment on that?
Yeah, I would love to add one thing. So it's definitely something is the FIS is in our radar. We actually accepting and storing cryptocurrency and digital currencies into our new core banking system, as an example, is something that we're investing a lot on, because we do believe that this is coming, this is happening. It is, I don't think, and that's my opinion, and that is something that is still in a testing mode. It's something that countries are seriously thinking about. It will happen. How much will it, how fast it will happen? That's, I think, the question. But definitely, digital currencies for countries is coming in the future, and something that we're heavily invested to.
Okay, thank you. I think we might be almost at the end. Let's try one quick one. And there's one here about biometric payments. In Brazil, they're pioneering biometric payments for MasterCard. What do you think the future of signing or approving who you are as far as your payment is concerned for digital wallets? Does anyone want to comment on that?
We're already doing it. My iPhone, the biometric authorization, it's my card. I'm sure you do the same, Chris, with yours. My Apple Watch, it's already happening. It's just integrating in a new factor. There'll be more and more of this. I do worry about just getting some of that tech right, but it's already happening. There'll be more of this in the future.
Okay. Thank you very much, Philip. That's all we have time for today. I hope you've enjoyed the conversation and that you take away some interesting and valuable information on payments trends and the future of payment solutions. It was great hosting our amazing speakers today, Nikesh, Philip, Barakat, and Chris. Thank you for imparting your wisdom. So thank you all very much for attending, and it's back to you, Pam. Thank you.
Thanks, Craig.
Thanks, Craig. Good job.
Wow. Well, that was fantastic. I hope everyone listening tonight enjoyed the conversation. I know that I will walk away with a lot of new information and a better understanding of payments, and I hope that you all will as well. If you have any additional questions or would like more information on the subject we've discussed today, please feel free to contact me directly. I'm always around. We are planning our next event, and we hope it's going to be face-to-face the next time. So watch this space. We'll be in touch with more information shortly. Don't hesitate to make contact with any one of our team members here at Liberty IT to talk about your business payments implementation or technology problems. We can help, and we would be happy to assist you. Liberty is also always looking for great talent to join our ever-growing team. So don't be shy. Feel free to make contact with any one of us in the organisation. We'd be happy to talk to you about career opportunities. We would like to thank everyone for joining us today from our audience and for the excellent questions that you posed to our speakers. Thank you to our Liberty team who helped stage the event. Of course, to Craig for moderating the discussion, and John Dimitropoulos, our CEO, who has conceived and sponsored every single event that Liberty IT has hosted to date. And the biggest thank you, a huge thank you to our speakers, Nikesh, Philip, Barakat, and Chris. Thank you very much for your insights. We look forward to inviting you all to our next event. It's going to be around core banking systems, and it will take place in August. And our team are currently working on an all-star panelist cast. Thank you again. Have a wonderful evening. See you next time.